Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 18th. Great to be with you guys to wrap up the week with today's webinar. Things don't last. Some of these moves continuing to fizzle out, but the levels still look clear. So we got a lot to cover today, guys. I got the DXY. Euro obviously came into that support structure yesterday that we talked about. You did see that offer the rebound. Dollar CAD, same deal. We'll go over the aftermath of the BOC interest rate decision. No surprises there. They hiked as expected. Aussie dollar, I'm still holding that short from yesterday I was talking to you guys about. With a half a trade left or a half position left on that trade. Again, came into support, weekly opening range lows, and we kind of just drifted right back towards the highs. So the stop is at break even still. If we get it, we get it. If not, still liking that lower. We're talking about dollar, yen, Kiwi dollar, and crude prices are critical. A lot of talk on the street about what's going on with the crude prices. We came off a huge resistance level. We've been talking about that here. So we'll go over the levels for that. Sterling crosses, sterling dollar, sterling CAD, and sterling Aussie. Sterling CAD broke out and did hit the secondary target on the upside. Pound Oz has just been in the range. Okay, it's been unable to really give us any material shift. We highlighted that earlier in the week, the key range to keep in focus, and that key range is still intact. So we can't really make any big assumptions on that one, but we will be tracking it. Last but not least, I do want to give you an update on Bitcoin and what that's doing. We did see a massive sell-off. I put out a piece on that on Daily FX yesterday. We talked about it here in the webinar, the drop coming into a big region of support. We did find a near-term recovery. Interestingly enough, the daily chart says something different from the intraday chart, and I want to highlight that today as well. All right. Any questions or trade setups you guys would like to review? As always, feel free to throw them on the message board at any point. That said, let's jump right in. So, first things first, DXY. This is a trade that we've obviously been following for quite some time. Look, the lows that we're making, we talked about this yesterday. You do have some slope considerations here. If we take a parallel off that low, that gives us a little bit more of a reserved support somewhere just above the 2009 swing highs. That's right around 89.62. That's still the level of support that we're looking for here on the index. So near term, there is some slope, which I'll show you in a moment, which is offering some support here. But at the end of the day, remember the analog that Jamie's been talking to you about. Remember the analog that we've been tracking. Really on the onset of the close of this week, really should be looking for broader resumption. Till that happens, in my humble opinion, the risk is still for this recovery to give us a little bit more of a whiplash. Here's what it looks like. So this is the weekly chart of the DXY, right? No change, major key support 89.62, major resistance 91.93, former swing lows from 2016, and a 38.2 retracement. Here's what DXY looks like on the daily. A couple of notes here. First of all, basic slope support. This is a near-term extension or a near-term pitchfork extending off the highs that we made from 2015 and 2017. Obviously, the 50 line coming right in there, catching support. Here we are dribbling above it, right, as support. Now, yesterday's outside reversal candle, typically these are going to be constructive developments in price, right? Especially when you see the outside reversals or the outside days at the lows. It could be a nice little tell that we are going to see a little bit more of a pop higher. That said, this thing hasn't even broken really the weekly opening range, right? We're continuing to hold right within that key near-term range, 91 resistance, slope support on the downside, holding this thing afloat. And until that happens, I'm going to be a little bit more of a neutral stance here on the DXY specifically. Now, that's not going to be a bias that you'll just carry over to all of the dollar crosses per se. But certainly, as far as the DXY is concerned, the risk for a near-term recovery with a break above 91, I'd be looking to sell that rally, right? Remember, objective break of the monthly opening range here back on the 12th of the month does suggest we should be looking for a late month low. So certainly on that account, we're going to continue to see, we're going to continue to look for this resistance start to hold here in the DXY. Intraday is very interesting. Okay, so here's the weekly open. You're testing weekly open resistance. We talked about 91 just a moment ago being near-term resistance. There's that slope, also just off the highs that we made from that November decline. Obviously, that channel, the parallel offered support on the way down. The breach saw acceleration. Here we are testing it as support twice this week. Okay, and we noted yesterday the divergence into the lows, trigger break to the upside. The rally took us right into 91 before pulling back. So again, I really, it, it sucks when you don't have a really clear indicative bias, but the levels continue to play out. We just need to respect this thing on the break. So if we see the top side swing 91.33, 91.90, levels of exhaustion we want to see. But at the end of the day, we're simply at downtrend support. Simply at downtrend support. So what does that mean for the dollar crosses? Well, this is where things get interesting. Euro Aussie, please, if you have a clue what it's up to. Pooja, I got you. We'll take a look at Euro Oz for sure. But here's what it looks like on the Euro dollar. And here's what we looked like last night. Okay, so what I wanted to highlight here is, this near-term structure that we added off the lows that were developed essentially in late December calendar month, that pitchfork. It was too early to really rely on this earlier in the week. If you guys recall, when we presented this on the 16th, this thing was just moving into the upper parallel. Now, that upper parallel has held. Okay, you saw one last spike through 22.96 and it again failed, and we did finally get the pullback correction into 21.67. Last night in the update, I kind of gave you a clue that I'm not really, sure on what to do as far as favoring further downside pressure. The obvious approach for me was if we got that deeper cut. Here's what the intraday chart looks like. If we got that deeper cut into 21.25, I'm 100% with Jamie on that one. I thought that would have been a nice entry for the long position. But as it stood yesterday, this thing came from way overbought on the pullback. You're coming into upslope support. So if we were going to rebound, this was sort of the first area to look. The rebound here, fizzling out again. And I still think that the risk is for a little bit larger of a dump to the downside in the euro. If you were on the long yesterday from an intraday type of position to the upside, I'd bail out of those at this point. I really wouldn't get too comfortable with it just yet. Essentially, if we get through 22.96, like I said, that would be the resumption trade, in my humble opinion, looking for a move on 123.76. So the levels are super clear. From here, though, I don't really think that the bounce has the material push to get through. I could be wrong. If we clear 22.96, that's going to be the line in the sand. Near term, we're basically looking for a clearing of the weekly opening range. Here's your weekly open right here. Right, so you can count this as a weekly open support bounce, structural support bounce, Fibonacci support bounce, whatever way you want to define it. Certainly the focus range still remains essentially the weekly opening range. So on some of these trades, again, nothing lasts, right? So if you're in the long position, you're up about, almost 100 pips, about 90 pips at this point. So you do want to be looking for near-term resistance along that slope again. Definitive break above 22.96, the only thing that would put this on a more bullish outlook. So remember where we're coming off of here in the euro. And I do want to bring attention to the euro weekly charts that we've been following. The close for this week is going to be paramount. I'm going to bring this up again because heading into tomorrow and the close of the week, we do want to see this thing close above this median line parallel extending off the highs from 2016 for us to validate sort of the breakout position targeting that 26 handle essentially. But this week's close is going to be quite important. So if we close southbound of 21.67, the material pullback play would be on the cards, I think, before we start to move higher. Ideal scenario, you get a little bit more of an interruption to the downside, but look for a buy entry on that move. Questions on euro dollar? Going once, going twice. Okay, hopefully we get some clarity on this move here. Key resistance range and near-term bullish inval right here, 121.24, 121.67. All right, that's number two. Number three on the session is dollar CAD. So we got the BOC interest rate decision yesterday. They did hike rates by 25 basis points as expected, but left the door open for the possibility of further rate hikes. Look, from a trading standpoint, the basic emphasis of the trade was 23.88 as support. You might have seen a tweet that we threw out right ahead of the release, and Jamie nailed it. It was 25.30 and change that we were looking for resistance. That's exactly where the dollar CAD rally inevitably fizzled out. But I just wanted to bring your attention to the broader scope here for the weekly chart. So the major focus on this trade certainly is 127.25. That's your near-term bearish invalidation level and downtrend resistance, former upslope support turned resistance. And, 2388 is a level that we've been watching. It's a 618 retracement off the advance from last year's lows, but certainly the median line for the formation that we've been in off that 2016 high still remains in focus. So even on a break below 2388, my point is watch that median line right there. That gives you 2260s, 2265, a break there on a weekly close. In my humble opinion, would mark resumption of the broader downtrend. So bigger picture, levels are clear again, but the momentum just isn't there. So how do you play dollar CAD from here? Well, it's not a simple setup, but here's what it looks like on the daily chart. On whole, it's very similar to the pound CAD trade. Or the pound Aussie trade, where we're just looking for the monthly opening range, which is very well defined, to break out. Major resistance here, again, into the 26 handle. You have the former swing highs from back here in 2017. You have the 100-day moving average. You have the monthly and yearly open right ahead of 2580 into the 26 handle. Support, pretty well defined. You got the swing lows from back here in July, 61 extension off declines from the highs you made back in 2016, and again, the 618 retracement from the advance. So look, until we clear this range, and I really can't emphasize this enough, guys, on these trades where we're trying to, it's like pulling teeth sometimes. We're trying to squeeze out some near-term positions, but the ranges continue to hold. So until those give out, be nimble. Okay, be nimble. So again, ultimately, as I said in yesterday's piece, ultimately, while I do like this to start to move lower on this session, as it stands right now from these levels, you have to respect at least the bounds here within the confines of this range. So let me go back here. So dollar CAD from yesterday's update, no change. Okay, 123.88 still near-term support. 124.89, just a pivot. Obviously, the BOC reaction took us right up into that 25.30 level before coming back, but near-term bearish inval, again, right at 26. Here's what the intraday charts look like now. So not much conviction as far as necessarily the levels or the momentum is concerned, but I will highlight the divergence that you saw into this last low. So a perfect trade setup that Jamie actually threw right on Twitter as this thing was going on was to short a spike into 25.20, right? That one took us right back into the lows of the week. Again, failure to close below that 23.88, the key 618 retracement, offered a nice little rebound. Momentum, finding support right around 40. Again, another tell in the near-term momentum signature. So look, on this thing, again, I wouldn't be surprised to see a little bit more of a larger recovery to the upside near term. Wouldn't be looking to target anything outside the realm of the broader monthly opening range. Ultimately, downside bias on the broader side does remain intact while below 126. Any questions on the loonie? Obviously, the stronger that we get the crude prices going higher, obviously that's could help propel further CAD strength. Dollar bias, obviously well defined as well. So the focus will be on what we do on the greenback heading to the close of the week. Immediate risk, in my humble opinion, still for a drift higher in dollar CAD, ultimately looking to sell that below 26. Okay, a downside break, as we noted in yesterday's piece, no change. We do see the downside break. 122.44 is going to be the first initial downside target at that 786 retracement. Converges on a parallel here that dates a little bit further back. I guess let me show you this a little bit more on the broader term. But some parallels that we were working with last year, okay, that converges right here at the 618, as well as a near-term pivot in price, both on the way down and the way up. So watch that first initial downside target if we do break lower. Questions on dollar CAD? Okay, and on the weekly charts, remember, look for close of this godforsaken range. Okay, outside high day reversal close that we made back here, back last month. 27.25. would be a sort of the resumption trade for a resumption higher. That being said, still looking for that break below 23.88. Okay, that's number 3. Number 4 on the session, our man's the Aussie. So Aussie looked pretty good. Everything on this one, in my humble opinion, was a very clear signal as far as the short is concerned. You had an outside, or you had a pretty big reversal candle right off slope resistance. That reversal candle was accompanied by ongoing momentum divergence. We were talking about that yesterday in the webinar as well, followed by a trigger break in momentum as well. Now, you guys know I've told you, as of recent, I really don't stress too heavily, these trigger breaks in momentum, but certainly when they're added or when they're accompanied by a clear directive in price and what we're doing off of resistance, it only further adds fuel to the fire. So there was a nice clear entry, at least for me on my part. I got in just slightly above the 80 handle. I think it was 80.004 or 80.004 rather. We took a quarter off on the way down. I was looking to take another half off if we got down into the weekly lows. It started to fizzle out ahead of trade yesterday, so I did bail on the half. I only have a quarter of this position left with the stop at break even, but I'm looking for the move lower. Here's what Aussie looks like now. I'm going to start off with the weekly chart, and we're going to work our way down. Here's what the Aussie dollar looks like on the weekly. The reason, well, let me take a step back. The weekly chart, as we highlighted yesterday, really the major sort of level that we're looking at, you had the reversal day close that you made back here on the 11th. That weekly reversal close came in right at the 80 handle. The high week close for the year of 2017 came in at 80.59. So from a weekly standpoint, there's still a little bit more room for the upside, but keep in mind, we're now working on our consecutive 6th week of advances. Okay, and as I showed you yesterday on these consecutive indicators, just a nice little tell sometimes to see if we have any other extremes in price. Last couple of times that we saw that, you did see a near-term correction. Here's the last time we saw an exact, 6-day advance. It was accompanied with a pullback. Privy to that, you had a 7-day advance here, which just saw one single day pullback before continuation. So certainly the extreme is not such where you would look for a major reversal in trend, more so just a near-term reversal in the immediate upswing. And there's been, those types of extreme measures have been popping up all over the place. So certainly, from a trading standpoint, we were looking for exhaustion, long story short. Now, for the Aussie specifically, the daily and the intraday charts have really been what have been giving us the most guidance. Specifically here on the daily chart, you're looking at a basic 786 retracement from the decline off last year's high. So it takes into account all of the price action post-September. And on the breakout of the objective monthly opening range does have us calling for a late month high. Okay, so what I'm trying to stress here, guys, is that the broader trends don't shift. What we're talking about here is just simple uptrends that have reached uptrend resistance. And certainly that exhaustion trade is what I've been writing about all week long, guys. But we have to be nimble, right? Trading counter trend is always a fool's errand if you try to get aggressive. Keep in mind, I noted this yesterday as well. Although we did take that short position, momentum is still an overbought condition on the daily close basis. So as far as that's concerned, that can, as long as this condition remains intact, the push, the momentum, as it were, the push behind the market still is in favor of the bulls. So we're taking that, on face value. The intraday chart is where things get interesting. Basic slope resistance. We've been following this near-term basic channel support extending off the lows from December. You saw a perfect tag runs here again early this year. An extension or a parallel extending off the highs here. Again, 1 touch, 2 touch, 3 touch, another perfect tag. And this is what prompted the short, in my opinion, yesterday. Okay, was what that price action did on that last spike late into the highs there. Right at the median line parallel. Again, as I noted, ongoing divergence in momentum, price action continuing to make an subsequent higher highs, the oscillator making subsequent lower highs, again, followed by a trigger break in momentum. So, I'm not necessarily concerned about this yet. We're about 14 pips in the money on this one still. If it gets stopped out, it gets stopped out, guys. The next topside level of interest would be 80.54. That's the high day close from last year. Okay, and certainly from just a technical lateral level standpoint, that's pretty big. Okay, it's pretty significant. So looking to see if we can get that playback. Like I said, the first levels, you're looking for basically the slope support that we've been following. So the limits I had right at 79.10 yesterday for the inside, just to happen on the inside of this, but I'll be bringing that up as we open up the US trade session to 79.20, basic slope support. We do get that move lower. That's where I'd be looking to bail on that last quarter of the trade that we have open. Any questions on Aussie? Remember, guys, we're trading counter trend on anything on the short side here, so you have to be nimble, okay? You want to bring that stop to break even as soon as possible. And again, you want to look for more conditions to further support the fact or the notion that we are indeed seeing a momentum turnover in near term. Does that make sense? So we'll see if we can't get that starting to pick up as we get deeper into the U.S. trade session. Remember, the end of the week is really when you start to see resumption of the dollar decline. So the idea was to look for some sort of near-term pullback here. All right. That's Aussie dollar going once, going twice, sold. We'll see if we can't get that hold below the 80 handle. Keep this trade alive. Dollar yen. Obviously, on the swing side of things, we still got stopped out in the money, but the rebound that I had noted in the previous update did inevitably pan out. So if you guys remember the previous update here, we were talking about dollar yen, and really just, objectively, lateral support really stood out near that 110.15 level. On the weekly charts rather, a basic 618 retracement from the advance off last year's low highlighted 110.15 right here. Here's what it looks like again for the weekly charts on dollar yen, right? Very, very simple Fibonacci consideration. Cool. Take it to the daily chart. Well, the daily chart highlighted a couple of more regions, or a couple of more reasons, I should say, that region should be significant. A, you had the 618 retracement, which we just talked about. B, okay, the measured move of the consolidation range break from the late, or the early, I should say, or late December consolidation break from that low, right? You saw a series of lower highs. You saw a series of higher lows, really minuscule, but nonetheless higher lows. And if you take that range break, the measured objective move gives you that 200% extension right at 110.22. So that near-term 7, 8 pip gap or 8 pip range also converged on basic slope support. Where does this slope come from? Well, basic slope resistance, a parallel extending off the low, converged right there again on that region. So very similar to the dollar index, an outside day reversal yesterday off that support structure. That's near-term bullish. The broader picture hasn't changed. We're still looking lower, but near-term, it's a risk, right? And heading into that level, we were talking about the fact that, basically, if dollar yen is going to see some sort of near-term recovery position, this would be the level to look for. We also noted yesterday that this thing had come off of a 7 consecutive day decline. The last 3 out of 3 times that we saw 7-day declines saw brief near-term recoveries before the resumption of the downtrend. So things look pretty encouraging, right? We got that exhaustion low. It came at a decent level, both in time and price. Price action gave us a reversal, a daily objective candle that was constructive. And again, near term, the rebound is in focus, but ultimately looking for that rebound to fizzle out just a little bit higher from where we are now. Okay, clear levels here on dollar yen. Now, subsequent downside targets, if this thing were to break down, just so you know, haven't changed. 109.85, 109.54, swing lows from back here in the early September calendar month, also converges on slope. These are both going to be another key levels and targets on the downside in such a scenario of a break. Right now, focus is for this rally to find a little bit more of an exhaustion trade on the upside this time instead of the exhaustion trade that we were looking at earlier this week. Intraday chart looked like this. Heading into the Thursday open, or the Wednesday open rather, 110.23, 110.15, still the level of support that we were looking at. We were noting that divergence, albeit while the most not compelling divergence signal, just the fact that momentum was unable to break into the oversold territory, again suggesting that a near-term exhaustion trade was at hand. Here's what dollar yen looks like now on the intraday charts. All right, so obviously, an objective break of the weekly opening range, an objective break of the weekly open here, again, shifts the focus higher. My concern is this, just doing a momentum study on this. If you look at the RSI signature, specifically more, I guess, on the intraday charts. So even on the 60-minute, unable to clear into overbought territory, that's what you want to see to kind of mark a near-term reversal pattern in price. Also, this could be a simple A, B, C pattern, in which case, if that is sort of the game plan that we're working with, whoops, you could see that the 100% extension, essentially this is an ABC pattern, got the highs. So my point being is, guys, if we break back below 111, the weekly opening ranges, that might be an indication that the near-term advance, the near-term fizzle approach here has kind of run its course. So anyone who's been long on the dollar yen, if you took that setup from Thursday, I'm out. I was out at 111.30, so way ahead of the highs, obviously, kicking myself because we did get another 20 pip extension to the upside. But long story short, right now I'm kind of just still scoping out possible new entries. If we get one last spike high and a failure on divergence, I would like to fade it, but ultimately a downside break here I think would lead to a bigger spill lower in dollar yen. Any questions? And the reason, again, that the higher up here, the 110.65, former swing lows, 200-day moving average, very, very clear pivot in price right there in green. You can see it. And they both converge more or less basically right above that 111.65 region. Any questions on the abomination at this point? Okay, a quick look at the Kiwi trade, and certainly Kiwi is a very similar setup to what we're looking at with the Aussie, but I just didn't quite have the same amount of conviction on this one because, well, let's face it, the last high that we made here yesterday really, for me, didn't come at a opportune level. Obviously, the pullback and failure to close back again below that reversal day close from last year, certainly isn't bullish. But again, at these levels, I can't advocate even a scalp or an intraday position trying to chase this higher. At the end of the day, if we do surpass the weekly opening range highs, I do see 73.75 right on tap. Certainly on the weekly or on the daily charts here, you're looking at the upper parallel, you're looking at the 764 retracement, nice kind of confluence region. But, I'm not touching this thing here. If anything, still looking for the possibility of the exhaustion trade in Kiwi. Hasn't really panned out. Here's what it looked like earlier in the week. So that initial tag looked good. We had, more or less divergence, and the trigger break did materialize. But the downside, as we noted yesterday, fizzled out pretty quick. Okay, we slid right back below the initial 72.61 target. This break had me targeting basically Friday's low from last week, 72.20. The low that we registered was 72.35 before we started to rebound again. So don't really have a clear-cut conviction on Kiwi. Gun to my head, I would think that this thing is going to make another run towards the highs. And, like I said, calling the highs always a fool's errand. There are pairs that have been a little bit clearer as far as giving us the indication to play the reversal. Still thinking Aussie wasn't all that bad, even though we might get stopped out on the rest of it. But in these market conditions, guys, please, make sure that you're being on the defensive stance. So when you get into the position, as soon as you get a quarter of the ATR, if you're trading with my strategy on the intraday basis, Be quick, take off a quarter, half, third of the trade, bring your stops to break even and let it pan out, because some of these moves are just fizzling out so quick that the ranges continue to hold. Whether it's euro, whether it's dollar CAD, whether it's Aussie, right? They're all doing the same similar thing where the momentum is just unable to really stretch, at least within the confines of this week's time period. So keep that in mind. All right. I want to take a quick segue into Euro Aussie here for you, Pooja, because it is a trade that we've been asking, or I've been getting a lot of questions about as of late. Here's Euro Aussie, and here's what we look like basically from a standpoint on the daily charts. So we broke back below yesterday, the monthly open, right, Pooja? We broke back below what we were interpreting as a near-term slow pivot. I'm going to drop this at this point. I'm still going to keep that red dot at the monthly and yearly opens. Um, so Pooja, I like where it rebounded yesterday. You see that 618 we were looking at? 52.66, really nice touch. And we've moved back higher. My concern on Euro Oz is this. Again, if Aussie plays back to the downside, we're seeing that the euro is still vulnerable below resistance. So that call for possible Aussie and euro strength doesn't really give me a strong opinion. Again, as I said yesterday, Pooja, we're still trading within the confines of the range. So I don't think you want to get aggressive on this. Gun to my head. Well, let me take a step before I give you the gun to my head approach. Pooja, this is what I would say objectively. A break of the weekly opening range here shifts the focus for a late week low. Now, Thursday, Wednesday night, late strike on the low could be the play. Would I be surprised to see another drop into the June high? Not really. The 100-day moving average is there again. Might be another area of support. But to try to play this on the long side, I'd need to clear the median line with some conviction at least. Resistance, 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 break, support, break, run, resistance, resistance, resistance. The slope is on point. You just need some sort of tell on the recovery, and I don't think we have enough conviction to play that yet. Don't think we have enough conviction to play that yet. See, I love these candles. I love these types of definitive price action moves. Outside reversal candle, 4-hour bar is a 2-hour bar right off of support. And it is an outside reversal 4-hour bar outside of support as well. So this would entail a little bit more of a near-term rebound play to the upside, but it's tricky here, Pooja. I wish I had a little bit more conviction for you. It's tricky here. A look at the daily shows me 152-ish probable. I think I will shelve this long idea for a bit. Yeah, I mean, look, I like the fact, and you know me, Pooja, we were talking about a really conviction, in my humble opinion, long exposure back when we came into 52.23, 52.26. You remember that? We were looking for the rebound. We got a couple of days of move higher, but this slam lower completely threw me off. The recovery back here did put us back bullish, right? But then the recovery and the pullback here, that's a little messy. like I said, gunshot to my, gunshot approach. I think you could see a little bit more of a stretch higher here back into slope, but it's not a conviction trade by any means, not for me at least. Good morning, D. Great to see you in the room. Mihai, great to see you as well. When and if time, please discuss about Bitcoin. I got you on Bitcoin, 100%. And the S&P, SPX, S&P 500. Sure. Let me add SPX here. Okay. So that's Euro Aussie, number 7. Pooja, I hope that helps. I know that you've been tracking this one closely, and price has been a little precarious. The other thing, from an Elliott standpoint, if this is an ABC correction to the upside, 1, 2, extended 3, you'd suggest that on the way 4, you'd look for that fizzle before a new low is made. So I have arguments for both sides of this trade, which is why for me, it's just not a conviction trade at these levels. Okay, thanks. She says, you're more than welcome, Pooja. More than welcome. All right. Crude. Oh boy. Oh boy. Here's crude prices. Look, it was massive resistance. I've highlighted this quite often, numerous amount of times here in the webinars. Basic as can be. Slope confluence resistance as far as a Fibonacci standpoint. You also had Fibonacci resistance up here. Here's what crude oil looks like on the weekly charts, the 100% extension. From the advance off the lows they made in 2016 gave you 64.78. That was literally, the high was 64.86. Okay, overshot it by $7, $8 before he came off, but such a huge region. You have the concerted median line for the current operative pitchfork we've been following off that low. And then you had that 100% extension, 2 equal legs off the high from 2016 gave us that convergence region there. Right? Now, as I always tell you guys, momentum remains in overbought condition, so you never really want to start chasing a rebound trade, which means we are trading counter trend on this. And we've been doing that all week. I got no problem with doing that. Of course, we have to remember that when we're doing that, we're always reducing our leverage size, being a little bit more meticulous with the stops, because we are recognizing the fact that the broader trend is still bullish. My big contention was that you were coming into a big resistance zone here. So the weekly charts really continue to pan out really well. I would look for a near-term support at 62.56. Bullish invalidation for the immediate advance is 59.94.60. As long as price is able to stay objectively steady above this on a daily close basis, on a weekly close basis, the broader picture remains constructive for crude. Immediately, the advance is at risk below 64.78. So, Mike, talking at both sides of your mouth, what does that mean? Well, the broader uptrend is still up. The near-term trend is at resistance. Look for that pullback play, and that's exactly how we've been trying to play this. Here's what crude looks like on the daily charts. So again, 64.78, that confluence zone. Add to that the near-term slope, just for channel support extending off of the lows that we made in October. Basic channel support, 2-touch, not really a major focus, but if you extend a parallel off the highs, you have a 2-point touch here, and the third touch was what was executed essentially on this last rally here this week. So from a daily standpoint, today, things to pay attention to. Momentum knocking on the door on 70, a break back below 70 on a closed basis for the day would be encouraging. Again, 62.56 near-term support. Bullish inval, 59.94 into 60. This is the only thing that would put us bearish. Other than that, we're looking for a support bounce off of one of these two levels. Now, subsequent topside break would take you to 67.14 as the subsequent target and 70.14. Like I said, for me right now, the immediate advance is at risk sub 64.78. Plain and simple. Plain and simple. Intraday chart for crude looks like this. Whoops. Okay, so basic slope support, again, off that December low. So I'll bring your attention, again, this is the broader channel that you were looking at on the daily chart, even within the confines of that channel, just off the lows from December. 1 touch, 2 touch, 3 touch. That support converges right at the weekly opening range lows. That's 63.23. On the upper side, take a parallel of that slope, extend it off the highs that we made back here in early December. You can see that that slope almost caught the highs perfectly. So the focus range, 63.23 into 64.78. Our favored scenario is a downside break of this near-term formation for the recovery. Ultimately, you want to buy that pullback after recovery. The immediate threat for me is lower sub 64.78. The break below 63.23 is what would actually charge the decline. Now remember, 63.23 is not just a random level and the weekly opening range lows. Here's your weekly open. This is actually the measured objective target of this consolidation structure that we were in all throughout the course of November and December. The break, technical analysis 101, measured move of the widest section of that consolidation pattern, given off the breakout, gives you a level right here at 63.21. Once we broke through it, it's been support ever since. It now converges on basic slope support. Questions here in crude. Game plan for me is still to fade strength below 64.78. Ultimately, 63.23 is the break to mark a larger correction in price. Keep in mind, we do get crude inventories later today at 11 o'clock, or it might be 10 o'clock rather. Don't quote me on that. But should be or could offer a little bit more of a volatility play here in crude prices. Questions? Going once, going twice. Okay, last couple of trades that we want to go through here. We're going to pick up the pace a little bit. Is the sterling trade. I'll bring your attention to the setup that we highlighted early in the week. So for the pound, the basic emphasis was these 3 resistance levels. We highlighted them early in the week: 138.09, 138.43, 138.78, a cluster of Fibonacci considerations, all within the confines of the near-term advance and the decline, and the overlap with some basic slope resistance. Really had me looking for exhaustion. But when we're looking for exhaustion, some of the conditions that suggest overbought conditions need to start to subside. Mainly looking at the momentum signature, even on this 240-minute chart, in overbought condition couldn't justify us trying to short this trade yet. Okay, now obviously we got that massive dollar breakdown yesterday. It drove sterling well beyond 138.78, but the magnitude of the pullback after that spike still has me thinking we're at risk here in pound. Okay, here's what pound dollar looked like on the daily chart. That's the significance of that region: 138.43, 138.09. Yeah, the 100% near-term advance extension, longer-term 618 retracement. This is a 618 retracement of the entire Brexit year, okay? And it converges on the median line. Here's what the daily chart looks like now for pound. Okay? So we still haven't gotten a daily close above it. And this is why, for me, I'm not going to chase this thing. I can't advocate getting long on the pound. The broader picture, looks like we just got taken out at break even on the rest of that Aussie trade. But the broader picture still remains constructive. I just can't justify buying up here. So for me, on an intraday basis, if we get some exhaustion, more evidence of the exhaustion trade materializing, it would be an opportunity, in my humble opinion, to try to take the short. Ultimately, we're looking for the large pullback to get long. We're a constructive pound. We've been constructive pound. Ain't a damn thing changed. We're still looking at this same setup here. Simple structural resistance. Okay, so to look at sterling on the intraday, real quick, here's what it looks like still. So despite the stretch, here's that big rip through 138.80, which was the last target, right? We were looking to stay bearish or look for exhaustion at one of these levels. Here we are. As price action makes a higher high, higher high, higher high, the oscillator failing to reflect those extremes in price. Again, suggesting that the momentum signature, the momentum profile, is suggestive of an exhaustion trade on hand. On hand. Not to mention the base of the advance here. 1, 2, 3, longest part of the rally. 4, completed 5. You'd look for the near-term correction lower before resumption. Questions on Sterling? Beyond here, look, you're looking at 141. That might seem far-fetched to people, but if we would have said 138 back in November, I'm sure they would have said the same thing, right? The technicals are the technicals. The levels are clean. From a structural standpoint, you have that 50 line, which has been perfect resistance right there as well. So on a daily close basis, back above 138.43, which we haven't done yet, to be fair, would suggest that you should be looking for the resumption trade by pullbacks into 141.25. My base case scenario is that you still see some sort of exhaustion blow off to the downside here before resumption. Questions on Sterling? I want to hit these two questions real quick. Eman, I do see your question here on dollar Swiss. We'll go over that in just a moment. I do want to just go over these last Sterling crosses real quick that we've been covering this week. So Sterling update from this week on the 15th, no change. Levels remain the same. We're still basically fighting to stay below this key region of resistance for a near-term pullback in Sterling. Sterling CAD is the one that was, in my humble opinion, the best opportunity to play Sterling strength. We highlighted the fact that 170.83 barrier break that we saw late last week, not only did it hold and close the week above, but the pullback finding support right at former slope resistance, right back at that 618 retracement, which has been a very decent pivot in price. And the focus to start the week was on this. Ultimately, a topside break favor targeting 173.14. Well, we've since got that. Here's pound Oz now. Or pound CAD rather now. Okay, we sat there, we ranged, we tested yesterday, obviously on that wicked CAD, spike position type of play, the drawdown coming right into weekly opening range lows and fizzling out. Right, this was only a split second that we drew lower, and then recovered again. Topside break above 71.95. Our initial target has already been hit, just below 73, 172.99. Questions on pound CAD. Favored of the pound crosses that we highlighted over the weekend, pound Oz, pound CAD, pound dollar, even pound yen. This is the only one that I've been really a little bit more aggressive in favoring long side approach, specifically with dollar CAD at support, right? So if dollar CAD rebounds, that's CAD weakness, should further propagate strength in pound CAD. Any questions on this pair? Okay, and last but not least, so we're coming off of initial resistance here. It's still an overbought condition, not a trade I'm interested in shorting per se, but a pullback. Again, I'd be looking for entry. If we can get back into the median line, that'd be great. I don't think that happens, but if we do get some sort of decent pullback into that 618, the 72 handle, you start to look for possible exhaustion again for a move higher. Pound Oz, there is no play here whatsoever, guys. The only reason I bring it to your attention is because the monthly opening range continues to be the emphasis on this trade. The monthly opening range taking shape right above a major key support pivot in price that's defined by the 2017 open, Fibonacci retracement from last year's sort of decline off the highs. And until later this week, you also had the 100-day moving average trading right in that range between 70.89 and 71.20. November opening range highs at 74.16. It's a massive range, but until it breaks, guys, I'm not interested in getting involved here. This is as chopped up as you can get. So the update from earlier this week where we highlighted the pound Oz daily chart, we're still trading that range. Look for a clear of it. Ultimately, I do think you get a larger move higher, but for me at this point, with where pound and Oz you're trading independently versus the dollar, this is as range trade as you can get at these levels. All right. Questions on pound Oz? Nothing really to look at except keep your eye on that daily chart for us to clear finally the objective monthly opening ranges. Things I would note that are a little bit, I wouldn't say a little bit, things I note that are still considering this thing a constructive trade. Overbought, overbought, pullback, basically finding support and momentum right around 40, dribbled a little bit lower. But, once we break, break a decent move above 50 again, and the momentum signature would suggest would be okay if we clear the monthly opening range highs. All right, let's take a segue here. Before I jump into Bitcoin and close this out, let me just take a quick segue here into dollar Swiss for Iman. Can I have an ideal stop, please? I'm in a long position, dollar Swiss at 95.95. Is it 95.50? She's asking where the stop should be. Let's take a look. Long position at 95.95. So basically right here, stop at 95.50. Let me ask you this, Eman, what do you have at 99.50? Or 95.50, excuse me. What do you have down there? Are you trading against this support? Is that what the idea was? And where's your target on that? So you had a divergent signal here into the lows. That was actually a decent entry on the long side. A lot of respect for median line resistance, right, Eman? So this is something I would pay attention to. It's a lot of respect for median line resistance, the reversal lower, basically being rejected at 50 in the momentum signature. Okay, so again, Eman, there's two ways of playing this. You have a pretty tight entry right near the weekly lows, slope support, and I see what you're trying to trade against here. This is just my humble opinion. For me, Eman, I would have the stop against the lows, just below this low. I know that we're looking at this region at 95.50, 95.60, but your openings, your stop quite a bit more than my comfort. Let's say that. If it starts to break down, and certainly on an objective basis, Eman, if we were to break the weekly opening range lows, I would expect this thing to tumble a little bit more. And so we do have that level here, and it's absolutely important. By the way, guys, what Eman is looking at that 95.50, 95.66 level is this, a 764 retracement of the advance from last year's lows, but also the subsequent daily reversal close. Okay, so the low of the year registered on September 8th. The following session, not only did we gap higher, the close of that reversal candle comes in right into that region as well. So although I did like the idea that you're working with, I wouldn't open up the gap for a stop of 50 pips on this one. That's just my humble opinion. Remember, Amen, what I always say to you guys, when we're trading counter trend, we have to be nimble. You don't want to leave big stops. You don't want to, unless, Amen, again, I don't know exactly what your approach is on this. If you're targeting something northbound of like 96.80, cool. But I wouldn't start to get aggressive on getting a stop too low on this one. If it takes out the lows, my concern would be this, man. If it takes out the lows and kind of just slams like right through this, you do an overshoot. Now you just got stopped out of the 50 pip rally or the 50 pip stop that you had there. But you could be right. So if it drops into here, I'd rather be out against the lows, look for a reaction here, and if it recovers, take a new long against that low. Okay, when we're trading counter trend, we never want to open up our stops, guys, because we're inherently recognizing the fact that we're going against what the market's doing. I don't think anyone's going to argue with me that this has been in a downtrend since the highs that we made in October of last year. That being said, you are at support, 100% right. But the way we approach that needs to be very cautious. So I don't think that you're necessarily, in a disastrous position. Actually, I mean, as close to the lows on the entry as you can is what you got. But I wouldn't start to open up the stops too abruptly here, too abruptly, right? At the end of the week, if the weekly opening range gives out to the downside, you're probably going to see this thing just shoot right through 95.50. And I wouldn't want to be, on the tail end of that trade. Eman, does that make sense? Does that offer some clarity there? Okay, last but not least, real quick, here is Bitcoin. Making a lot of headlines. There's going to be talk about this all over the place. 96.80, my limit, and I will set my stop to 95.70. Yes, you're more than welcome, Eman. I hope that helps. The only thing I wanted to highlight here really quickly, I wrote this on Daily FX yesterday. I presented this setup, and there was a lot of interest in it. I got a lot of interesting feedback. I guess guys who have been long are loving the fact that I was offering some support here, and the guys that are short are calling me crazy because they think this thing is still heading down to $4,000. Look, it very well might. Always something to keep in mind whenever you're looking at Bitcoin prices, guys, specifically on the longer term charts. Do make sure that you bring it into toggle the log scale instead of arithmetic. The ranges are just too big, and you'll get a more better, precise look at where price action is doing. But one thing I just wanted to highlight, the swing low that we were talking about at 11.159, we never closed below it. This thing dribbled as low as 92.86, but look at the closes. That's a tell. That's a tell. So while I titled it Relief in Sight, yeah, I do think you're getting that relief as we speak now. Longer term, guys, there is serious structural damage to the advance in Bitcoin. And I do think that there is more downside to go. The immediate focus heading over the next couple of days, yeah, I could see this thing get back in 1280, no problem. But that's, you'd need to have a firmed close above the former monthly opening range lows to make that assumption. As it stands, a rallying to 1200, rallying to 1280, in my humble opinion, would offer better opportunity to get back on the short side here for another move lower. Ultimately, I'm looking for that drop into initial targets at 87.28, 86.43, this region here. Okay, Fibonacci confluence region of the 618 and the 100% extension. So even if this is just correctionary, A, B, C type pattern, that should be the low. And again, the 618 off the low, that convergence, I still think is a major level that we'll see hit here in Bitcoin prices. Okay, and within the confines of the near-term decline, highlighted resistance here starts to show up right at 1197, 1307, both areas of interest for possible entry for a move lower in Bitcoin. Okay. All right, guys, we're going to have to wrap it up here. I want to thank everyone for your attendance. I will see you on Monday morning on Daily FX at 8:30 Eastern for the free session, and right back here on SB Tuesday, Wednesday, and Thursday. You're pretty light on data heading into the close of the week, so keep your eye fixed on price action. And those weekly charts that we've been reviewing specifically on the dollar crosses, guys, will be paramount. So we'll try to keep a focus on that and keep you updated on SB Squawk. Till then, best of luck trading, and I will see you next week, guys. Have a great weekend. Cheers.